It's great to see you, Ian. It's what a wild ride. I so enjoy watching Tesla. The shorts lost $8 billion through this morning. I was happy for the bulls who were really, excited to see the run. What do you think about this volatility? I mean, we can't say we didn't expect it.
Well, I think that the most important thing is to understand why it's happening first. And then to look at sort of where the level is that I think is the most important level going forward. I think it's happening because there was some fundamental news, but I have no fundamental opinion on the stock. I believe it's largely a technical move based on the fact that the float, the actual free float of the stock is when you strip away Musk and all the index funds, you're really only talking about 30% of the shares that are actually available to trade. And the index funds, and this is another discussion about sort of whether they're good or bad for investors, have had to reweight their positions based on Tesla's moves. So you have this dynamic where it's kind of a buy high and buy higher mentality, because as each dollar comes into a passive investing fund, they're just buying the stock based on its weighting. They're not giving any fundamental analysis whatsoever. So it doesn't matter if Tesla's at 500 or 900. All that matters is what it's weighting in the index. Combine that with the short base, which you described, and options desks around the street that are probably short. And you've got, one of these parabolic melt-ups that we see in stocks from time to time. It usually doesn't happen in stocks this big. But clearly that plus retail getting involved now with all the excitement that it has been generated, and you've got an interesting scenario.
Well, the phrase, I want to look at some of the financials and some of the thought process behind it. First, I want to take a look at the actual numbers and the VWAP and what you watch so closely, where people buy, where people sell. When you look at the technicals on this stock, which right now is at $725, tell us what you find.
So what I've experienced over my 20 plus years of trading is that in these situations, it's very important to look at the multi-day VWAP. Now, the VWAP is just the volume weighted average price. All that means is how much volume is traded at every single price. And I started at January 2nd because that's the point where everybody seems to be focused on as far as its gains. And when I do that, I get a number of 604.5 right now. And what that tells me is the average person, the average investor in the stock since January 2nd has either bought or sold the stock at 604.5. And so that level, which will go up as the stock trades here, is the key level to watch, because if the stock closes below that, that tells me that the short base has been exhausted. And a lot of the longs who have been retail sort of playing this big trade, on average, are going to stop themselves out at that level. So a close below that level, again, that level will move up if the stock continues to trade above 700, would indicate to me that the trend has been exhausted.
So it's critical to watch that key level if you want to get in or out of this stock. As a pro in the business, and you talk about the float, would you touch a stock like this?
Well, I don't have a fundamental opinion, so I wouldn't touch it. I don't understand it one way or another. If you told me the stock was going to be, 0 or 10,000 in 2 years, I equally believe both. I don't really know what to make of it other than, to me, this is clearly a technical move. It's clearly something to think about as people talk about passive investing and perhaps what, are some of the downfalls, because if you own an index fund, you just bought Tesla at 930, $930, and you might be selling it today based on the move. And so It's just something to think about. And as a purely technical move, which is what I think this is, that's why it's so important to watch the actual stock technicals. And that's why I think that multi-day, in this case, month VWAP, is the level to watch to determine whether or not you're going to stay in on the long side or perhaps press your short. I would wait until it gets below that level.
Right, and we know that the shorts were covering, no doubt. What about when we look at what's going on with the story behind it? You know, that we can understand a little bit more, and that is that there's, you know, the delay in the Shanghai factory, that kind of stuff is more tangible. When you see it at 724 coming off of that high of $968, down to 724, without saying that you like Tesla or you don't like Tesla, when you see a stock move like that, 968 to 723, you know the VWAP was at 604. What do you do here?
Well, I mean, you know, it depends on what your time horizon is. If you're just trading the stock, you know, I would probably look to buy it into that VWAP level. And then if it breaks there, closes below there, I got to be disciplined and sell out. But the reality is, you know, whether it's at 930 or 720, if I told you 2 weeks ago the stock's going to be at 720, you would probably say, wow, if it gets up there, I'm selling it. But because we just look at price, and we look at it relative to the last sale, as opposed to sort of what this company's actually worth, you know, price tends to dictate behavior. And so for me, you know, the fact that it's down 20% means nothing to me. I mean, I could argue it's up, whatever, you know, 80% from where it was in the beginning of the year. So, you know, to me, it's less about that and just about, look, if you're going to trade this stock, and clearly people are, just be prepared to follow the technicals, because fundamentals right now, in my opinion, do not matter.